Filing taxes as a business owner can be confusing, especially when it comes to choosing the right tax form. The IRS offers different forms depending on your business structure, and using the wrong one can delay your return, or worse, trigger penalties. Here's a simple guide to help you choose the correct business tax form for 2024 filings, which are due in 2025. For sole proprietors and single-member LLCs, if you're self-employed and haven't formed a corporation or partnership, this is your form. You'll report income and expenses directly on Schedule C, which is attached to your personal Form 1040. This is really common for freelancers, consultants, gig workers, and online sellers. You'll also file Schedule SE to calculate self-employment taxes. The advantage here is that it's simple to file, and you don't need a separate business tax return. On the downside, you pay self-employment tax on all profits, and there's limited tax planning flexibility. For partnerships and multi-member LLCs, if your business has more than one owner and you have an elected corporate status, you must file Form 1065. It's considered an informational return, meaning the business itself doesn't pay tax, but instead reports income and expenses. Each partner receives a Schedule K-1, showing their share of profits or losses to report on their individual returns. The pros: pass-through taxation avoids double taxation, and there's flexibility in distributing profits. But you have to track basis and allocations, and honestly, it's more complex than Schedule C. For C corporations, things work a bit differently. A C corporation is considered a separate legal and tax entity, so it files its own tax return using Form 1120. The corporation pays tax on its profits, and then shareholders also pay tax on dividends, which, creates what's known as double taxation. Now, some advantages here include a lower corporate tax rate, 21% as of 2024, and the potential for retained earnings and certain benefits. On the flip side, though, there are some disadvantages, like double taxation and honestly more complex reporting and accounting requirements. For S corporations, if you've elected S corporation status, you'll use Form 1120S. It works pretty similarly to Form 1065 in that profits and losses pass through to shareholders' personal tax returns reported on Schedule K-1. This setup helps you avoid double taxation while also offering potential self-employment tax savings. Let's do a quick summary. For a sole proprietor or single-member LLC, you'll use Schedule C, and the entity does not pay tax itself. For a partnership or multi-member LLC, it's Form 1065 plus K-1, and again, the entity doesn't pay tax directly. A C corporation uses Form 1120, and yes, the entity pays tax. And finally, an S corporation files Form 1120S plus K-1 and the entity itself does not pay tax. Choosing the wrong tax form can really cost you. At SK Tax Associates, we help business owners understand their entity type, tax obligations, and the best structure for growth and savings. Schedule a consultation today to make sure you're filing the right way in 2025.